And now it's my pleasure to introduce our panelists for today's broadcast. Joining us from Bristol in the UK, we have Nina Kingsley and Andrew Connolly. Nina serves as VAT manager on the Radius Advisory Services team. Fluent in English, Bulgarian, and Russian, Nina's extensive knowledge of indirect tax systems in Europe, GST in Canada and Australia, combined with her background in import tax recovery, supply chain transactions, and custom procedures, have helped Radius's customers with their indirect tax planning and compliance management. Next, I'd like to introduce Andrew. Andrew is an indirect tax consultant with the Radius Advisory Services team. Drawing on his broad expertise of UK, European, and group VAT, Andrew supports Radius's clients on a myriad of indirect tax issues. Andrew's specializations include VAT on intra-EC transactions, VAT within an SAP environment, and care home VAT reclamations. Over to you, Nina.
Okay. I would like to introduce the VAT and then say a few words describing what kind of tax is VAT. Also, I would like to give you a little bit of a background about how did VAT come about. And finally, I would like to just discuss why is it important to know how VAT works, and how this knowledge can help you improve your profitability and your cash flow management. First of all, what is VAT and what kind of system is the value-added tax? Well, value-added tax is exactly what it says, what the name suggests, is this is a consumption tax, and is levied by the national government on the end consumer. Of course, there are different versions of the VAT system, and different rules apply to different, depending on the jurisdiction in which the VAT system is enacted. How did VAT come about? Well, the origins of the value-added tax system has never been decisively settled, but we think there is a record of VAT ideas recorded, and attribution is given to two people, the German businessman Wilhelm von Siemens and the American economist Thomas Adams. They wrote their theories between 1910 and 1920 and 1921. So the VAT as an idea was developed and recorded in early 20th century. The VAT as a national tax was first introduced in France in 1954, but its original coverage was quite limited. The international adoption of the VAT as a global tax progressed in two major phases. The first phase occurred mostly in the Western Europe and in Latin America, and it reached its peak between 1960s and 1970s. The second phase of the VAT adoption occurred from the late 1980s with the introduction of the VAT in some high-profile industrialized countries outside the EU, such as Australia, Canada, Japan, and Switzerland. This phase also witnessed the massive expansion of the VAT in the developing economies, most notably in Africa and Asia. So from relatively inauspicious beginnings in the early 20th century, today the VAT has been adopted by more than 140 countries, and it accounts for approximately 20% of the tax revenue worldwide. Today, the only tax which provides higher revenue amounts than to the tax authorities apart from the VAT is the income tax, which is still the strongest example of the 20th century tax policy conversions. And the last point I would like to discuss is why is it important to know how the VAT system works. I think the answer to that question is really simple. The VAT affects the cash flow of any business, and it could also affect the profitability of the business if there is no planning, or the planning is the VAT planning is ineffective. The VAT may become irrecoverable, or you may, for example, be liable to charging VAT and you haven't collected your VAT from your customers, in which case the VAT becomes a cost to the business. The VAT percentages vary between countries, but in average they would be anything from, say, some countries are the tax havens, such as Australia, for example, such as Switzerland, take as an example, is 8%. But the majority of the countries, you would expect anything between 15 and 25% VAT. So it can impact significantly on your profitability and definitely on your cash flows.